Meme stocks are generating so much buzz and money for investors on the right side of the trade that institutional investors and financial institutions are now generating watch lists. So let's talk about this with Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Gareth, welcome back. So glad you're joining me today on this Thursday, glorious Thursday. So many market moves to talk about. We're going to go over AMC. Blackberry has moved for some reason, and Dogecoin. How are you?
I'm doing great. Thank you so much for having me, David.
I know you're doing great because you told me you shorted AMC at the right moment. We'll get into that. Take a look at this. New Reddit stocks to watch according to Bank of America. So now Bank of America is putting on a meme stocks watch list. I found this hilarious. I was reading this on CNBC this morning. AMC obviously at the top of the list. So what they're doing is they're compiling a list based on the number of mentions on Reddit as well as the short interests. GameStop, among other stocks that you're. Are you watching any of these stocks yourself? Do you have like a similar list that you've compiled?
Yeah, absolutely, right. So the key is that as a shorter term trader, I'm always keeping an eye on anything in motion like an AMC or a Blackberry. Those type of stocks you do want to keep an eye on because they're the ones that are going to give you the trading opportunities. There's no doubt about it.
Okay, let's take a look at this chart now. AMC spiked up from about $10 2 weeks ago all the way to above $60, and then it's down 22%. Well, 20% now, 21. It's moving a lot. It's moving right now as we speak. So the news this morning, Thursday, was that AMC has announced it would sell 11.5 million shares to raise funds for various projects. That contributed to the sell-off. But you told me you were positioned for the short already. Now, were you impacted by this news, or did you just look at this chart and think to yourself, this is crazy, let's short it? What was going on through your mind?
Yeah, so yesterday as it was climbing, I was basically dipping a toe in the water at a time with our traders here. So, again, you never know how high these things are going to go. What you do have is a little bit on the technical side. We had a time count on the chart. So that was a little indication that you were probably reaching exhaustion. And yesterday when it was trading up in multiple dollar integers every minute or so, that's also kind of that euphoria maximum that you look for. But I mean, to be clear, my average price was around the 57 and change range. And this morning pre-market at one point, it was like at 78 plus. So it's not like I timed it perfectly or anything like that. And as a trader, you never want to assume you're going to time anything perfectly. What I do is I just take a small share size and then I allow myself lots of room to maneuver by adding additional shares. And then I make sure when I see a stock like AMC, I say, okay, even if I end up with a few thousand shares, that's not a big position to me and I can weather the craziness. Because I don't think I'm sure there are people that think it will keep going up, but I think common sense tells you at some point at least it will have a pullback. And that's what we were basically positioning ourselves for today.
Okay. All right. Well, common sense has served you well in the past. It served you well today. Gareth, can you pull up that chart one more time? I'd like to ask you why you think it's run up from $10 all the way to 65. I've been reading various things. Dogecoin we'll talk about later. There was a definitive story around there. But what was going on with AMC? Why have we seen a resurgence of this short, with this seemingly what it looks like a short squeeze? It's a flashback of February all over again. But anyway, yeah, I'll let you do
February to the millionth degree with AMC because it went so much higher. But this is so fascinating. So basically you have a scenario where cryptocurrencies over the last month topped out, and then you saw this big drop on Bitcoin, big drop on Ether, even Dogecoin, which was at 1.75 cents, back to the 30 to 40 cent range. And my guess is that you had a lot of average investor money in crypto. And what they were saying or what they were thinking is, okay, crypto's pulling back. It looks dead for the time being. I'm going to pull money out of the crypto market, and then let's focus in on these stocks. These are the ones that ran before. They have high short positions again, and let's squeeze them again. So my guess is you had the craziness in crypto, which attracted a lot of money, which is why AMC was quiet for so long, GameStop relatively quiet. And now the money flow is coming back. And we're seeing this more and more where money is not just rotating from stock to stock, it's rotating from market to market as transportation of money becomes easier. You just basically do a quick ACH from your crypto account to your stock trading account. boom, your money's there. You can trade it, you get leverage and all of that fun stuff. So I think that's really what happened here with these meme stocks over the last week or so.
Interesting. Let's look forward now, Gareth, because last time what happened when we had a big spike was that it really it dipped for a bit and then it continued spiking. I think one of the reasons is the fact that the institutional investors who were shorting it, they kind of folded right away on that big rally. It doesn't seem to be the case this time around. A friend of mine pointed this out to me. Let's take a look at the put to call ratios for institutional investors. It's still at 0.93. Very high short interest from the institutions on the short side. And get a load of this, Gareth. If there's only, I find this interesting. So there's only about 850,000 shares available to be shorted for AMC. But at the same time, if you take a look at AMC's float, it's got a shares outstanding of 450 million and 417 million in its float. So not a lot of shares left to be shorted. Institutions are positioned on the put side. Putting all this together, do you think the institutions will have a better chance of driving the stock down this time around?
Yeah, they certainly aren't as freaked out by it, maybe because they've seen it again. They saw it prior with GameStop, months ago and so forth. I think one of the keys here is that you have to recognize, so if you look at GameStop, for instance, GameStop is not, it hasn't had the same type of meteoric run. And I can quickly bring up that chart for you guys here. So you can see this is the weekly chart of GameStop, but you can see here's your meteoric run on the weekly, and then you pulled back, you had another pop, and you've kind of consolidated here. On AMC, it's much different. And if you ask me, the difference here with why this stock has gone parabolic, but the institutions have not given up on their shorts, is because you have to look at how many more shares are in the company's float than there were years ago. So on the weekly chart, and this is another fascinating thing that most average investors don't realize, but back in 2015 and 2016, the stock got as high as $35 a share. At that point, when it was at $35 a share, there were about 100 million shares outstanding. Now, when you've seen this stock go up to $70 in recent days, there's now 400 million plus. So to do the math here, you would have had to see AMC trading at basically $280 a share to make it equal to the price spike back in 2015 and 2016. And if we were thinking about it, right, if you look and say, wow, AMC's at $250 or $300 a share, that's ludicrous. But again, average investors aren't realizing that. There's so many more shares. GameStop didn't do that. GameStop really didn't issue a lot of new shares over the course of the last year or so. And I think that's an issue with why you're seeing the institutions willing to hold on here, because they know that the float is so big. The market cap has no reason to be up here at these levels, and it ultimately should come in.
Okay, so how are you positioned now? So you had shorted. Did you close your position, or?
Yeah, so we closed that position today. I did it in basically different segments. So initially, when I had my position short and it was going as crazy as it was, I was definitely on the nervous side, seeing how high it was pre-market. So I basically, and these are the trades from today. I made $2 on the downside, and I took half off the table. It then popped up again, and I re-shorted that same half position, getting to a full position. It then dropped $2 again. I took that same $2 profit. And then the last portion, the last half, I made $11 on the way down, and I covered it for an $11 gain. So I'm not trying to be a hero. I think this is going to go back to $20 ultimately. Wow. But I'm not trying to be a hero and say I'm going to hold, for that big move to the downside.
Well, you could be the hero or the villain depending on who you're speaking to. If you're shorting it all the way down to $20. Okay, so that's interesting. That kind of answers my next question as to whether or not you think it's going to continue rising or falling. You said it's going to fall down to $20. Okay, I mean a lot of. Just to pop in here, just one thing to, and this is just, so everything I do, either it has to be technical based, which you obviously saw the extension move, so it was at least due for a pullback. But I think you have to also just look at the fact that the streaming service has really done a big bite off of the going to the movie thing. Now, they can reinvent themselves in certain ways, but you can go to Costco and buy an 80-inch or 100-inch TV for not that much money, set it up in your house. You can have your nice relaxing chairs, make your own popcorn, and streaming services are releasing new releases almost immediately now
that you can watch that movie at home without going to the theater. So, yes, the theater experience, if they can reinvent it, could be something of interest. But I don't think it's going to be the same thing. And I was even asking myself this question: do I really want to go to a crowded movie theater on like the first day of a showing and have someone sneeze behind me? Now, granted, I'm vaccinated, but do I really want to even, it's just kind of gross at this point. So I don't know. I think that the whole movie theater experience has changed, where you're not going to see the same amount of people going.
So none of this has to do with fundamentals then. It's not because of people, or maybe some people disagree with you. Maybe some people think, well, look, there's going to be a huge resurgence of people just jumping back into the theaters because they could. And so, but even then, even if you do think that theaters will be filled up again, I don't know if this move is justified. I don't know if that valuation reflects that reality.
Yeah, you're 100% right with that. Is that it's if you think that AMC theaters should be just as packed as they were, let's say 2 years ago or 3 years ago, okay, so maybe it justifies where it was 2 or 3 years ago. Does it justify a market cap that's bigger than Viacom? I don't know. Viacom makes a massive amount of money every year. They're monstrous in terms of. So that's the question you have to ask yourself. And I want to be clear to people that are loving this stock is that I'm a trader. When it gets overbought, I short. When it gets oversold, I'll buy it. I'm not someone who's looking and saying, well, where's this company going to be in 10 years? If you're someone who's focused on them reinventing themselves like GameStop, then by all means, feel free to hold on. And I do wish you all the best. I want everyone to make money. I'm just a much shorter term trader.
That makes sense. Just want to briefly point this out. So people do agree with you just based on this headline. It's funny how AMC is now all of a sudden a meme stock. I mean, at one point, it's still a legitimate company, right? But now it's a meme. All right, let's move on to another company that has almost become another meme in itself. Blackberry has seen moves today. Let's take a look at the Blackberry chart. What happened here? The media is reporting, of course, that the Wall Street Bets group on Reddit is behind this push. What's going on? It's kind of gone down today, but went up about 20% overnight.
Yeah. So this one for sure, this is right in that same group. If you go back to that period in January where GameStop was running, you can see it had the same type of move. So what we've seen is, KOSS has gotten a bid. Any stock, Bed Bath Beyond was up like a huge amount yesterday as well. All these stocks that ran in that January period, they're all getting secondary runs. What's kind of interesting to me is that really the only one making new highs is AMC versus, if you look at a Blackberry, it didn't get back to its highs from January, nor did GameStop, nor did KOSS. KOSS was just crazy back in January. That stock went over $120. And again, it's down pretty sharply today. But I think that's what's going on here is you're seeing the same money coming out of crypto. They're saying, okay, these stocks ran last time. They're hot right now. Let's all pile in them and try to squeeze these shorts again. And then, like you said, it's going to be interesting to see, do the institutions hold on this time or do they give in and cover their shorts?
GameStop, AMC, Blackberry, fundamentally, what do these stocks have in common? They're all old tech. It's all just a nostalgia play.
That's, that's the exact term that I was thinking as well. It's thinking back to the early years, for millennials and saying, if Blockbuster was around, I bet Blockbuster would have gone up even more, right?
I still remember Blockbuster, going out to rent a movie with my parents. It was fun. It was fun. It was an experience. Now you just stream things online. All right. So before we move on to cryptos, let's sum up. So you're not long AMC right now. You don't want to be in the foreseeable future. Blackberry, any of these meme stocks you're long on right now, or do you just want to stay out and short? Or short, they're different things.
Yeah, they're all pulling back at this point, so I wouldn't pile on the short at this point. But for sure, I'm not a chaser. I don't like chasing momentum. I'd much rather stay in my little cave, and when the setup is there on the charts, then I'll definitely jump in.
Okay, let's take a look at Dogecoin. Big moves. So June 1st, a couple of days ago, it was announced that Coinbase Pro would make it available on their trading platform, and it spiked up all the way from well, let's take a look at that chart. Couple cents all the way to 70, almost 70 cents. It's gone down since. But no, not quite 70 cents. Sorry, I was looking at the wrong timeline. It was up. It was up to. Pardon me. It was up 42 cents. Yeah. So still a big move. So about 30% jump this week. and it's come down a little bit since then. How did you play this? Did you play it at all?
I did not play it at all. I really haven't, honestly, I haven't bought or sold Dogecoin since the big run up. Obviously, I regret that considering the move it had from a half a cent to wherever it went. And I think it went about 75 cents higher. But no, I haven't played this one. For me, the cryptocurrency space has always been a place where I go because they're all about scarcity, right? And with Dogecoin, you don't have scarcity. There's 10,000 more Dogecoins printed every minute, just like the US dollar is getting printed. So my thesis for Dogecoin just doesn't apply for what other cryptocurrencies like Bitcoin would do. However, saying that, you can clearly see a potential head and shoulders here forming. So I do want to say that investors in Dogecoin should be very careful. Now, you've had the bounce of the right shoulder here. If you come down and you take out 30 cents to the downside, this has sub 10 cents written all over it. Now, it still could go higher in the near term. You guys know last time I was on, we talked about Bitcoin. I'm sure we'll go over the chart in a minute. And I still think Bitcoin has upside to maybe 48 to 50,000 before the next leg lower. But I think when that next leg lower comes, you're going to see Dogecoin break below 30 cents and really head down sharply. So I'm sure it's not going to be the most popular thing, but it's just what the charts are telling me, folks. It's just, that's really how I try to do it, is just, keep my emotion out of it and just say, okay, this is forming on the chart. Historically, these patterns have this percentage chance of playing out, and therefore we have to think that that's a possibility of happening.
I was going to ask you to zoom in on this week's price action, and because it looked very dramatic, 30% run up. But if you zoom out just back to May, it's still nowhere near the top. It's still nowhere near before Elon Musk went on SNL and called it a hustle. So
yeah.
Remember before he said that, it was all the craze, potentially the new Bitcoin people were calling it, but it doesn't look like that anymore. So tell us a little bit more about this head and shoulders pattern. What happens after this? Usually, you have this big downward arrow.
Right. So a head and shoulders. So you can see very clear defined head and shoulders here. So here's your left shoulder, head, and right shoulder. And then really a head and shoulders only triggers when this neckline, this is what we refer to as the neckline, when that breaks. And that's really the catalyst for the collapse to the downside. So really, in all fairness, you could still see Dogecoin go up higher, maybe to 50 cents, maybe 55 cents. The key is whenever it curls down, if it comes back to that 30-cent level, that's where investors who are long would really want to be watching carefully. Because once you break that trend line, that neckline, usually you'll see a very, very sharp decline in a matter of, it could be days, down to, and again, the target here would probably be 8 to 10 cents on the downside, which would be massive. And what's interesting here, folks, let's go to the Bitcoin chart here because we can show that essentially the same pattern played out on Bitcoin. And here you have the shoulder, head, and shoulder. Here was your neckline. And then notice how it hit the neckline. And then right here, it broke. And then within 3 days, you hit 30,000 from 50,000. So you can see how that plays out so quickly as that support line breaks. And now you can see Bitcoin starting to tease and inch up just a little bit.
Okay. All right. So yeah, a couple of weeks ago, you called the 30,000 line. You nailed that. You said it could potentially trace down to $20,000. We haven't seen that yet, but you also said that upside momentum is to be expected before any further retracement.
Just let me clarify that too from what I said. So basically, what I said is the 30,000 hit. You should retrace to 48,000 to 50,000, which is the neckline. And then I expect another wave of selling down to 20,000. And what's interesting here is, so again, short term, very short term, I'm bullish, on Bitcoin, thinking that it'll do a retrace. And then if you ask me 3 to 6 months out, I think you do probably head down to 20,000. And interestingly enough, I think you got a very short term breakout here on Bitcoin. Let me just see if I can find the chart pattern here. Let me go to.
Well, wait a minute. We're already in June, Gareth. You said 3 to 6 months out, we're heading to 20,000. What happened to all the $100,000 Bitcoin calls people have been making? You're going to disappoint them.
No. So don't get me wrong, David. At 20,000, I'm going to be buying like crazy because I do think it's going to. But remember, if you look at 2017, you made that top near 20,000, and then it really took 2.5 years to start this next move up. So when I'm talking, 3 to 6 months in the scheme of a bear cycle in Bitcoin, that's not a lot of time, right? So I want to be clear is that Bitcoin, I'm in love with it. I love the idea. I love diversifying away from fiat currencies and having the stability of a Bitcoin that can only have 21 million mined. But at the same time, just like anything, there's going to be cycles. You're going to have big breaks to the upside, big breaks to the downside. What we want to do is we want to just recognize where the lows are going to be and then accumulate more or buy it at that point. So just for instance, in the short term, what you can see here is this beautiful little trend line here this is my 60-minute chart of Bitcoin. And you can see that pivot, all these pivots along here. And then look what the short-term price did. It broke above, it retested. And this is probably what's going to send it up now. I wouldn't be surprised if by next week we hit 48,000 or close to it on Bitcoin in the short term. So again, short-term analysis dictates upside to maybe 48 to 50, basically retracing to this neckline. And then I think the next wave of selling takes you down here to the 20-ish thousand level, where you'll ultimately should put in a longer term bottom for the next move up. And again, remember folks, 50 to 70% corrections on Bitcoin are not out of the realm. I mean, this is very commonplace for Bitcoin. You just have to, again, just expect volatility. It's a new thing in the scheme of investments in this world we live in, and it's going to have extra volatility, and just know the charts and be ready to buy at the right levels.
Just before I let you go, Gareth, what do you think of the notion of a crypto winter hitting us soon? Crypto winter is a term that describes basically what happened post 2017 all the way to 2019, a period of a couple of years of just flat consolidating price pattern. Could that happen this time? Would it happen, and why?
Yeah, so I think it absolutely could happen and likely will. And if it's a couple years, folks, don't think. I mean, I know everyone wants to make millions of dollars, overnight and stuff. But let's remember that if you're investing in Bitcoin, the thesis is what matters, which is diversifying away from the Fed just printing money, the government debt, and all that stuff. So longer term, look 5 or 10 years out, and that's easily where this thing is north of 100,000 for me. But if you get a couple months or even 6 months or a year or two of sideways action, just know that that's accumulation going on, where buyers and sellers are meeting, and ultimately watch the institutions, watch for that institutional kind of buying pressure to come in. And I think the cause of this could be obviously China cracking down on cryptos. The question is, does the US government decide to do anything to kind of stem the rise in Bitcoin in terms of an alternate to the dollar? Those are all types of things that could easily get in the way here.
All right, very good. Excellent updates. Thank you very much, Gareth. You shed some clarity on this madness of a Thursday, so I appreciate you coming on the show today. Thank you.
Thank you, David. Have a great day.
You too. Speak to you again soon. And thank you for watching Kitco News. Don't forget to subscribe. I'm David Lin.